Bitcoin just crashed. Ethereum is down. Solana is taking a massive hit. Is this the end of the crypto bull run? Everyone's panicking. But what if I told you the mainstream news is missing the real story? Forget what you've heard about inflation or interest rates. There's a much deeper reason why the market is tanking. And in the next few minutes, I'm going to reveal exactly what it is, with the data to back it up. Stay tuned, because understanding this is the key to navigating what comes next. Before we dive into the secret, let's get some perspective. This isn't crypto's first rodeo. Remember Bitcoin's journey? From just a few cents to over $60,000, it's been a wild ride of massive peaks and gut-wrenching valleys. We saw it in 2013, again in 2017, and in 2021. Each time the market roared back stronger. Then came Ethereum, the world computer, introducing smart contracts and DeFi. Its path has been just as volatile, mirroring Bitcoin's cycles, but with its own unique twists. And then you have the newer players like Solana, promising faster speeds and lower fees, attracting a wave of developers and investors, but also experiencing extreme price swings. Volatility is not a bug in crypto, it's a feature. It's the price we pay for the incredible gains. These cycles are driven by technology adoption, investor sentiment, and something called the Bitcoin halving, which historically kicks off major bull markets. Understanding this history is crucial because it shows us that crashes are a normal and even healthy part of the market's long-term growth. So what's happening right now? On the surface, it looks familiar. We're seeing prices plummet across the board. The fear and greed index is flashing extreme fear. Everyone on Twitter is either calling for the absolute bottom or predicting a crypto apocalypse. The news will tell you it's all about macroeconomics. They'll point to rising interest rates, making borrowing more expensive, and pulling money out of speculative assets like crypto. They'll talk about stubborn inflation numbers, spooking the market. And of course, there's the constant chatter about government regulations. Are they going to crack down? Are they going to approve that new ETF? These are definitely important factors. They create the weather system that crypto has to fly through. We can also look at on-chain metrics. We're seeing some large holders, the so-called whales, moving their coins to exchanges, which can sometimes signal they're about to sell. Exchange flows are a key indicator of market sentiment, but here's the thing. While all these factors contribute to the storm, they are not the lightning strike that caused this specific, sudden crash. They are the background noise, not the main event. The real reason is something more specific, more hidden, and it has to do with the complex plumbing of the crypto market itself. Alright, let's pull back the curtain. The real reason for this dramatic crash boils down to a massive cascade of liquidations in the crypto derivatives market. Here's what that means in simple terms. A huge number of traders weren't just buying Bitcoin or Ethereum, they were using leverage. They were borrowing money to make much larger bets on the price going up. Think of it like this. You put down $1 and borrow 9 more to buy $10 worth of crypto. If the price goes up 10%, you've doubled your money. Awesome, right? But if the price drops just 10%, your initial $1 is completely wiped out. You get liquidated. Your position is automatically sold by the exchange. Now, imagine this happening to thousands of traders all at once. A small initial price drop triggers the first wave of liquidations. These automatic sales push the price down further, which then triggers the next, bigger wave of liquidations from traders with slightly less leverage. This creates a domino effect, a liquidation cascade where forced selling feeds on itself, causing the price to spiral downwards with incredible speed. We saw billions of dollars in leveraged long positions wiped out in just a few hours. This wasn't a fundamental rejection of crypto's value. It was a structural flush-out of excessive greed and leverage. The market essentially cleansed itself. So, where do we go from here? I've been talking to some of the sharpest minds in the space, and the consensus is interesting. In the short term, expect more choppiness. The market needs time to heal after a liquidation cascade like that. Confidence is shaken, and it will take time for buyers to step back in with conviction. We could retest the recent lows, or even dip slightly below them, as the last bits of fear are squeezed out of the system. However, looking at the long-term picture, many experts remain incredibly bullish. They see this as a massive buying opportunity. Why? because the fundamental drivers haven't changed. The Bitcoin halving is still in effect, reducing the new supply. Major institutions are still building infrastructure to get involved, and the technological development in areas like DeFi, NFTs, and Layer 2 solutions is accelerating faster than ever. One analyst I spoke to put it perfectly. The tourists got washed out, but the builders are still building. Their prediction is that once this leverage is cleared, the market will establish a new, stronger base for the next leg up. So let's wrap this up. The crypto market just took a major hit, and while headlines blame inflation and interest rates, the real trigger was a massive cascade of forced liquidations in the derivatives market. Overly leveraged traders got wiped out, causing a domino effect that sent prices crashing. This is a painful but necessary part of the market cycle, washing out the excess speculation. While the short term looks uncertain, the long-term fundamentals of crypto remain as strong as ever. This could be one of those opportunities people will look back on in a year and wish they had taken. Remember to always do your own research. This isn't financial advice, but I hope this gives you a clearer picture of what's really going on. If you found this breakdown helpful, do me a favor and hit that like button and subscribe for more deep dives into the crypto world. Thanks for watching, and I'll see you in the next one.